Hey there, folks. This is Mitch Firestone with Precision Trading Labs in New York City, and I'm here to bring you give you some summaries of some trades that I had shared with our subscribers and community members at Precision Trading Labs. Today we had two and really three great trades on the futures, and so what we're looking at here is the results of something that we did with the micro NASDAQ. So I'm going to show you the after picture, of course, which is the result. But then more importantly, I'm going to show you the before picture of what we were looking for in terms of the setup. So the result of this was, though, about 3 p.m. today, price came down into this zone here, and we got this nice little bounce that occurred. And so the zone that we had here, we were putting up about $53 of risk. You can see that the depth of the zone here was about 26 points right here. And we were actually looking at this in a 3-minute chart. So we got this nice bounce here. We were risking $53 per contract. So if you obviously, if you were putting up 5 contracts, that would give you a risk profile of about $250. And we ended up getting a 2-to-1 trade on it. And that was the way we had mapped this out here. All right. So that was we got this nice bounce here. And this whole trade basically transpired. This is a 3-minute chart. This was what, 1, 2, 3, 4, 5 candles. So this basically transpired in somewhere between 12 and 15 minutes. So this was a real nice trade. More importantly, though, let me show you what I was looking at before all of that occurred. Okay, so this is what occurred. This is what I was looking at I guess, about 15 minutes or so before. Okay, and so here's what was going on here. So price came up into here. Again, this is a 3-minute chart here. And if you notice, price, was kind of just, grinding up here. It pulled back. And then right in here, we had this little area of consolidation where price came up into here. We had this bullish candle here. In fact, let me just blow this up just a little here for you. So price came up. We had this bullish candle. And then notice then price went sideways in here. And if you also notice, these are kind of very indecisive candles. They're kind of whipping around. They're predominantly wick, very little body, but they are closing sideways. And then, of course, notice right here, we had this very, very bullish candle that rockets out of there and closes practically at the top of its range. Okay, so there is a story in here. Okay, and the story is, if we think about the contracts that are acquired by buyers, okay, right in here, okay, we think about those. We can think about as the demand for contracts within this price range here, okay, and that price range is roughly from 29,220 to 245. Okay, so within this roughly about a 20-point range in here, okay, those basically buyers were willing to acquire shares here, or I should say contracts here. Similarly, we can think about the contracts that are offered up by sellers, and we can think of that as the supply of contracts within here. And so within this region here, supply and demand were in balance, okay? And then right here, there was some kind of change of perception. Well, I don't know what specifically what it was, but so there was some change of perception. And at this point, no one was willing to sell here anymore. Okay, and so the way this green candle, of course, formed is basically the buyers had to run up the price chart until they encountered willing sellers. Okay, and so that's how this very, very bullish candle occurred. So right here, what was left in its wake, where there was supply and demand that was in balance, all of a sudden an imbalance occurred. Things went out of balance. And what was left in its wake was only demand. There was no longer any supply. And as a result, we call this region here, we call this a demand zone. Okay. And when price returns to a qualified demand zone, there is the expectation that there is going to be another wave of buying. Does that happen all the time? Of course not. This is trading. Trading is about a probability function and managing risk, and also, of course, coming up with setups that work a reasonable amount of the time and where you can get a multiple on your risk. Okay, and so this particular setup was the expectation was it was a high probability setup. Okay, this is what our risk was going to be, and the expectation was if things went well, we would be, we could very, I won't say easily, but there was a high probability that we could basically see a 2-to-1 trade out of this. Okay, and so what we're waiting for is for price to pull back into this region, and then this is where the second wave of selling occurred. So this is the setup, and we're waiting for this level to be tested. And if you notice, this price had not been back here, so this is what we refer to as a fresh demand zone. Okay, and then and again, here's the profile of the trade. We're looking at a 3-minute chart. This is what's referred to as a rally-based rally formation. Okay, and then this, again, it's a demand zone, and from a demand zone, what we do is we go long. And plus F, of course, means we're going long on a futures contract. Okay, and then the risk with the stop is, as I said, this zone was approximately 22 points, which would be 88 ticks, but then we give it a little extra wiggle room there. And you can see it was approximately 88 ticks for the zone, but I'm actually giving it, and then the full risk profile was 106 ticks, so I was giving this about an extra 5 or 6 points. And at 50 cents a tick, that's what our risk profile is, $53. Okay, so again, that was the thesis for the trade. And again, then once we had that, okay, there was the zone we just saw. Price eventually then pulled back, bounced. It actually then pulled back a second time, and then after that, it kind of rocketed out of there. It paused, and then then it was another shot up, and then at that point, we had the bracket order in there. Okay, when we set these trades up, there's always the entry, the stop, and the target. The target was already set up there to take profit, and so when price came up into here, we were out. And so that was a real nice trade. So I actually had, I think I had, what was it? I had 6 contracts on. No, I had 5 contracts on for this. So my profit there was basically a little over $500 there. Okay, having risked about 250. Okay, so anyway, that was that setup. The other nice trade that we had this afternoon, and I will show you that, was this trade with, I should say, this was actually a trade that we had last night at the start of the session. I'm doing this from New York City, so we're in the Eastern time zone. So the session starts at 6 p.m. the night before. So this was the setup that we were looking at last night. So here's the result of the trade. And again, I will show you though what the setup was ahead. What I was looking at prior to this. So this was a short that we had last night. Okay, and so but basically price came up here right at the open at 6 p.m. and then we got this nice move down here. And then that was where we got out. This was actually a zone that was based on a 15 or a 20-minute chart. I think I was actually looking at the 20, and then I kind of refined it with the 15, or vice versa. I'll show it to you in a second here, though, what the setup was. Okay, but this was the setup here. So again, this is oil, and this is the micro oil contract. So this is $1 per tick. Excuse me, $1 per tick. And so this zone here, you can see the zone itself was 70 cents deep from 98.40 up to 99.10. And then I was giving it an extra 20 cents of breathing room. Okay. And so that made a total risk profile of $90 per contract. And that's what's laid out here. Okay. So here was going to be our entry. Here was going to be our here was going to be our target. Here was the stop out. I have to say, one of these things actually moved. These banners here moved a little. I did not lock them down, so they're off by a couple of pennies here. But essentially, there's our entry was at 98.40. The stop was actually at 99.30, not 33, and then the target was at 95.70. Okay. Not 95.69. So these ended up moving a little. But anyway, that's the setup. And so over here, let me show you what the before picture here looked like. Okay, so this is what I was actually looking at last night. Okay, or before the session ended. Okay, in fact, I was actually looking at this during the afternoon. You can see this is about 12:30 yesterday. in the afternoon on Thursday, and so or on Wednesday, I should say. And so I was waiting for the price to pull to basically end up here in order to short. If you look right here, okay, price came down, consolidated, and then there was actually this little move up. Then notice there's this one little consolidation candle, and then notice this string of very, very bearish candles, all of which closed at the very bottom of their ranges up to this point. Okay, so this is all indicative of obviously major downward price action, and right in here, this is the essentially the same story that I told you about the NQ trade, but turned on its head. Okay, where before I talked about an exhaustion of sellers, this represents an exhaustion of buyers. Price came up, consolidated here briefly, okay, and then and notice that it's trading in a very, very narrow range, and then all of a sudden, again, there was a change of perception. Something happened where all of a sudden no one was willing to sell here anymore. Excuse me, no one was willing to buy here anymore. And so the way these red candles, of course, occurred is that price essentially buyers as sellers ran down the price chart until they encountered willing buyers, and that's essentially how all of those candles occurred. Incidentally, just to reiterate that, if you watched CNBC or let's say Bloomberg, a lot of them would say, "Oh, the sellers were in control here because of the fact that the price was, kind of going down very quickly." And that's actually ridiculous if you think about it, because if they were in control, would they actually be wanting to sell at lower prices? No, of course not. What's going on here is essentially, even though no one likes to say this, the buyers are really in control because the buyers essentially are backing down the price chart. And the only reason that these trades occurred is they're backing down the price chart, and the sellers are actually running down the price chart in order to then execute these trades. So if you think about it, really the buyers are in control here, not the sellers. But I'm the only one that says that, so what do I know? So at any rate, price came up here, consolidated, then it thudded down here. And so what's going on here is we're waiting for price to then return up here, and there's the expectation that again that there is untapped selling pressure that we're just we're waiting to tap here in order to then look for another wave of selling. Okay. So over here, what we have here is here's our profile, the trade profile before it occurred, of course. So right here this is our entry at 98.40. Let me just back it up a little here so you can see that. So here's our entry at 98.40. Our stop is going to be at 99.30. And our take profit would be at 95.70. And part of there were two things that led me to actually establish that profit point. First of all, I'm looking at this move down here. There was a healthy move down here. Okay, I'm not obviously trying to get this entire move. That's kind of being greedy, but also the fact that I'm looking at this here and this wall of candles that was getting created here. This was, the expectation was this might actually be something that would block the profit path once price came up here. And so what I did was it essentially said, okay, if it's possible that the move down, if it worked, might actually get stopped down here. And so what I did was essentially put the take profit right ahead of that. Okay, and so that's obviously a 3-to-1 move, and I'm perfectly. If I can get 3-to-1 on every one of my trades that work, I'm having a pretty good trading life there. So I was perfectly fine with this. Could it have gone further? Of course it could have. Okay, but again, what we're trying to do is not be greedy and to basically have a process and a trading plan where we can, reliably on a high probability basis, be able to kind of hit singles and doubles, to put it in baseball parlance. Okay, so getting these 2 and 3-to-1 trades, and to get them on a reasonably consistent basis and limit our losses, of course, to 1 unit. That's kind of a money ball on base percentage kind of strategy, and that's certainly what we do here. Okay, so at any rate, there was the setup there, and that's what we were looking for. Okay, so if we go back to the result here now, just to review, so there it was. what I just explained. You can see price came up here. That's where we got out. And then, for quite a while, it just kind of grounded, it kind of kept on grinding. Eventually, it did, as you can see, it did come down a bit. That came down further, but obviously, no regrets here. This was a perfectly fine trade. Okay. Also, just to show you here, we did not take this trade. Okay, but if in fact, if I go back to the original chart here again, you'll see that I actually mapped out. This was another zone that I had mapped out here, and for various reasons, I ended up when I was talking to our subscribers and our community members, I said, you know what, it looks reasonable. It could very well work, but I was a little concerned about the fact that it was actually a very chunky level. This was $2.06 without even putting the stop in. Okay, so that's $206 right there at risk. And then if you're going to give it an extra, let's say 20, like I did above, that becomes essentially a $225 risk trade. And at that point, I looked at the extent of this move, and you can see this move really only kind of went really more or less went up to, kind of barely two to one, maybe 2.5 to 1. And so if I'm trying to get, let's say, half of that measured move here, well, then I'm really looking at a significantly less than a 2 to 1 trade. And generally, I want to feel like when I'm putting on a trade that it has a really good chance of getting a minimum of 2 to 1. Okay, because there's going to be numerous times you're not going to get 2 to 1 just because the clock runs out or the price action is just not going in your favor. And so sometimes you'll get a trade that's 1 to 1, even 0.5 to 1, and it's because again you trade the market you're given, not the market that you want. And so I want to feel like when I get into a trade, at least on paper, it's got a real good chance of getting 2 or 2.5 to 1. And this one really didn't, in my opinion. And between that and also the fact that this was a rather chunky level, I said, you know what, this one's not the greatest setup. You can take it on your, you can take it under advisement. It might just work anyway, but it's not the greatest setup. On the other hand, this is the one that I was really enthusiastic about. Okay, and so if we go back now, you'll see what happened was, as it turned out, I won't even say I was wrong, but I think I would read this the same exact way as I did here. But as you can see, it got up here, it basically went sideways. It came back here once, and then once it caught, it made it up certainly to 1.5 to 1 with very little effort, and eventually it then kind of continued on up during the day. As it turned out, this probably could have been a 1 to 1, 2 to 1. This was a 3 to 1 trade, but on paper, it did not look that way to me. And so my judgment was it just wasn't this was not an A or an A plus setup, and so we didn't take it. As a result, we kind of missed the trade, but I'm totally comfortable with that. Again, you try to you make the best judgment that you can, and you don't always get it right. And you can see, though, some of our couple of our subscribers and community members were rather happy with us. This guy here said took the trade in the evening. It triggered right at the market open. He was a little bit conservative with the take profit, and it closed. He got 2 to 1 out of it as opposed to the 3 to 1, and basically called me out and said, "Nice, good call out." So always appreciate that. So at any rate, that's what I got here with the setup with those results. But what I want to do now is I'm actually if in this oil chart, and I'm going to go to the live chart here. Here's the live chart. And so I actually think that there's another setup to be had here in a higher time frame. If you notice, let me go actually grab the live chart here. So here we are. And I actually think that there's another setup to be had once price breaks out of this range here. And that's located up here. These are two areas of interest that I marked here in higher time frames. Okay, so I'm going to show you that, and we'll see if we can actually piece together a setup. Before I do that, though, because I am going to put together a setup, the usual disclaimer, Precision Trading Labs, we are neither money managers nor financial advisors, and everything I'm showing you here is for informational and educational purposes only. So here is what I was going to do here is I'm actually going to piece together and see if in fact there is another qualified setup. So if you notice right here, price is kind of going sideways. Let me just spread this out a little for you guys. So notice here, price comes down. Notice it goes sideways here, and then notice we have that thud that goes down. Obviously, we already took a chunk out of that chunk, a nice little chunk out of it here. Okay, but in the bigger picture we have this large move down here. Okay. And so there was an imbalance, I think, that got created again between supply and demand. And again, I think that there is a supply zone to be found here. It's just that the fact that we're looking at it in we're looking at it with the wrong lens here. I think it has to be viewed in a higher time frame. Okay. So what I'm going to do is I'm going to bump up the time frame here. So we got a 15-minute chart here. So I'm going to look at this in probably about a 1 hour chart here. And let's bring this back here and we'll see what we got. And let me get this circle out of here now. So here are the two areas of interest though that I just showed you. There's that and there's that. Okay. And if we look right here, we can now see there is just, major bearish energy here. And notice prices go sideways in here. Okay. And in fact, right inside of this base drop formation, you can see inside of here, there is a rally base drop formation. And that's actually an odds enhancer. The fact that I can actually find a reversal inside of this continuation pattern. Okay, because when price comes up to a supply zone, we obviously need it to reverse. So in fact, when I have a supply zone, even if it's a continuation pattern, if I can find a reversal within that, that's great. Okay, so the way this trade is going to lay out is going to be like this. This would be our basically at the back of the zone. Here's, I think, where I would place the front of the zone. Mark that up here. We put in our simulator here, our measuring tape. And our entry would be at 130 cents. Let's make sure the front line there, right, 130. Get that aligned there properly. Then we're going to give it, let's say, 20 cents again on top. So that would bring the back line is at 101.36. So we'll put this at 101.56. And in fact, let me get this out of the way here now because I already took screenshots of this, and this is all history here. So let me get the noise out of here. So this is what our new trade would look like, I think. So again, we have this base drop here. Notice then that again we have this exhaustion here. So when price comes up here, this is where we would have our short. Okay, and so the way I would lay this out is, okay, we're looking at this in the 1 hour chart. We have a base drop formation. We're going to short. We have an internal rally base drop formation inside of there, which is an odds enhancer. And again, we have, let's say, 126 ticks total, which would be the depth of our zone plus the stop. And at $1 a tick, it's 126 bucks. That's how much risk we would have. And in terms of then laying out our target, that would be approximately 2.5 to 1 right here. So, part of what we're going to get out of this trade, of course, has to do with what time we get in. These trades all need to be intraday, because what we're doing, we're taking these trades in the context of a funded trader program where we are assisting our subscribers and our community members in gaining access to funded prop accounts to trade futures. So at any rate, that's what I got. There's our setup for oil. So you should take a screenshot and see what happens with this. So anyway, thank you for joining me. This is Mitch Firestone with Precision Trading Labs, and I'll see you next time. Take care. Bye bye.